Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, June 15th, 2023. I am Frank Ochoa, aka PivotBoss. Happy Thursday, everyone. Here's a look at the daily time frame of the ES. Big time uptrending price action here over the last month, or last several weeks at least. Three good weeks of straight uptrending price action. Good breakout through the 4250. We got new FOMC key levels yesterday. You'll see right here. The 614 FOMC key level is 44.21 in the ES. That's going to be an important level here moving forward. We'll see how the market reacts to this level right now. But as of the current moment here, we are still making a way higher. We have passed through the 4200 market structure. We are en route to 4600, currently sitting right at the midpoint of that zone at 4400. And again, any pullback here could lead to a continuation higher. Even if it's a deep pullback, it could still lead to a bounce back up the way. So at the moment, this market remains extremely bullish, hard to fade. Instead, into weakness, bulls may look to defend for a continuation to the upside as this market continues to remain hot. Very, very bullish Pima trigger zone as well. So any pullback, even as deep as that 8-period average, could still be defended for a continuation higher. If we take a look here at the NQ, the unfadable NQ remains very bullish as well. Again, just this look right here, you can see how bullish the Pima trigger zone is. You can see the buy the dips here has been very fruitful so far. We're currently at a cycle high, a new FOMC key level here at 15,134.75, which is basically one tick below a previous FOMC key level, which is 15,135. That FOMC right there again will be used as a reference point moving forward. But even if we pull back right now as deep as 14.8, for example, that could provide a buying opportunity for a continuation higher. 15,250 is going to be a big level up above to test. That level's coming into view very soon. Yesterday's high 43.5. Pushing through 250 starts to open up the next zone up above. So big time continuation overall. Any pullback could still lead to a buying opportunity as this thing continues to see strength. At some point, perhaps a significant rejection day could put in a strong high, but until then, buying the dips remains the best path forward. If we take a look here at crude oil right now up 1% at the moment. You'll notice here that this market again continues to hold within this range between 67 and 74. A little bit of a rounded price action here. Still hasn't given up 67s just yet. But one thing that we've seen in this chart over time is this channeling behavior here continues to unwind to the downside. So downward channeling price action here. You'll see price get nice and compressed and then find the edge and rotate back. You'll see price here break to the downside and rotate back. Here we're seeing much of that again. Compression here. Perhaps we break down and bounce back up ahead. So at some point here, 67 may get overwhelmed. We may see a push to new lows. That new low could be faded at some point down the way. Until then, we're still kind of building up here. From an intraday or very near-term perspective here, we have the new FOMC key level coming in right here at 68.88. Price holding right around that level right now. Inside day developing here with the potential, if you start to push through 70.5, you open up a little bit higher as we stay in the range. Again, failure at 67 at some point down the road could open up new lows ahead. Taking a look at gold futures, this one's down 1% today and is testing the 1940 edge. This is a big time test right now. You'll see obviously a bit of weakness that we've had since the strong high here at 2080. Now you're seeing a big test at the 1940 level. We've had a very narrow 20-day range here from 1940 up to 2000. That narrow range here has about 130 to 150 points of energy built into it. If we're going to break down and fail here at 1940 and rally, say 140, 130, 140 points, that puts us right back to these highs. So 1940 plus 140 is 2080. That'd be right in the middle of this zone here of expected number of points. So if this is going to become a strong rejection here at the edge, at the very least, If we're gonna reject this edge, at the very least, we could see a return back to the FOMC 1967.30, and perhaps back to the top of the range here at 2000. A push through the range opens up the next flow ahead. So we'll see if this can continue to develop into a strong rejection here today. So far, early on here, the rejection has been fairly good on the intraday time frames, whether it's the intraday 4 or 5 minute chart or the 1 hour chart. A nice developing tail developing here. We'll see if it can catch fire and push back up within the range. Taking a look here lastly at the YM. This one's mostly break even here on the day. You'll notice here price remains quite bullish. Very, very strong move to the upside. A new FOMC here at 34,353. That 353 also coincides with the top of the key range here. You have the midpoint of the key range and the bottom. Recently we rallied from the bottom to the middle, from the middle to the top. Are we about to see a rotation back to the middle, or is an attempted breakout up ahead? This is a big time zone of resistance, the 34,600 level for this market. You can see that 34,617 FOMC that comes back has been resistance for the most part. At some point, again, if we break through, we start to open up that next wave of strength up to about 35.4. So that could be the next wave up. But until then, keeping an eye on 34.6 for signs of a breakthrough or perhaps a rotation back down. If we do rotate back down, you got the middle of the key range here that could be in play back toward 33,680. So keeping an eye on this zone again. Very hard to fade this market right now. Bullish at the moment, and with the rising 8 period here, any pullback could still be a buying opportunity for a test at these highs. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.